Is your stock portfolio down by 5%? With the recent market rebound, you might be feeling tempted. AC open your accountancy that negative sign, twit thoughts likely pop into your head. The first is to double down, average down, and wait for a bound to break even. The second is to hold in, just a bit longer, hoping JIT will truly bounce back. I will tell you straight, according to real statistics so for tail investors in the Taiwan stock market over the past years, under this combination of 5% losses and their bound signal, nearly 5% of those huchus had to average down, end up with deeper losses 6 months later. In the next Wufenjon Utes, it will show you why averaging down at his momentous satrap, and share a strategy most people haven't thought of, which can shorten the average break to an even time from 10 years to a year. First, let's talk about a figure, unit talk no. According to the 2020 Retail Investor Behavior Analysis report from the Taiwan Stock Exchange, the average holding time for tail investors in the Taiwan stock market is 4 years. This means that when you be a losing stock, you have spent an edge of over 3 years to break even or sell a talos. Even more disheartening is another figure, among retail investors who are locked in with over 5% losses, 5% choose to average down, 20% choose to do nothing, and only 14% choose to recognize shallow short switch stocks. That probably sheer averaging down is an action taken by 64% of the market. However, statistics show that this group also has the high as percentage of sus sinking deeper. Why do so many people do this? Because averaging down seems mathematically rational. Let's break down the underlying logic of averaging down. Mathematically, it works like this. Ibuta stock at 100,000 de dropsto 70, and you invest another 10,000 yuan. Your average cost drops to approximately 85 yuan. As long as the stock price revives, you break even. It sounds reasonable. Beauty the things you don't see. The first is the sunk cost fallacy. Behavioral economic shasa concept called the sunk cost fallacy, meaning that when someone has already paid a perceive for something, they tend to invest more other than admit the loss, even if continuing to invest only leads to greater losses. The money is spent at 100,000 yuan has already dropped peto. Tisha that 5% losses an established fact and will not disappear just because you add more. Beauty your brain deceives you. Mu making you feel that adding more can recover thelos that has already occurred. In reality, what you are doing is doubling down on a stock that is already problematic. The second thing is confirmation bias. The moment you decided to average down, you automatically search for evidence to support this decision. If the analysts say stock will rebound, you remember it. If the analysts say fundamentals are problematic, you ignore it. This is not your problem. It is a fault mechanism of the brain. Psychologists call this phenomenon confirmation bias. The problem is that when you are held hostage by confirmation bias, you have lost the ability to judge whether a stock is still worth holding. You are not making an investment decision. You are making an emotion alone. The third thing, and this is the most critical, is the gambler's fallacy. When gamblers lose money, the most common decision they make is to bet more. They believe that the next then will be win because they have already lost so much. Statistically, there is no such thing. A stock dropping by 5% contains no necessary connection to whether it will rebound next. What determines a rebound is the company's fundamentals, industry trends, and cash flow, which have anything to do with your cost basis, but the psychological structure of the action, no averaging down is identical to a gambler adding to their bet. You didn't buy the stock because it was good, you bought it because it fell. Let's look at the three things together. Sunk costs keep you from leaving, confirmation bias lets you see in like good news, and the gambler's fallacy makes you believe that the next turn will be win. This is why 5% of those who average down end up with deeper loss, 6 months later, averaging down itself is not necessarily wrong. The mistake is acting without judgment, averaging down fails. Let me tell you real historical Cassidy, and you will get a better feel for this. In Fei Lin RR, there was a stock in the Taiwan market called Evergreen. As it fell from its 2021 IGA retail investors collectively averaged down. Data from the Taiwan Depository Fee Clearing Corporation revealed in 2021 how nature tail holding proportions for this stock climbed from 5% at its peak to all 7%. This means Themo retail, l'investor sat to their positions, concentrating the viewing power in retail hands. And the result. From 2020 RT, the stock fell another 40%. There are tell investors who couldn't hold on longer werthians hufenaliria lestar losseside of venlo or prices. If you had realized the loss when it first dropped by 5%, the loss would have stayed at by 5%, but because they of averaging down, the totalos eventually became by 5% to by 5%. See averaging down is in twang, the mistake I acting without figuring, out if the stock is worth it, averaging down failed. At this point, you might have a few counter-arguments, solid shandel themon bion. The first on my task is, but the math for averaging down is correct. The average cost really does go down. This statement itself is correct. Beauty you are ignoring a variable, wilth stock actually rebound. The average cost lowering on, li make sense if the stock truly rebounds. If it continues to drop by 5%, you are essentially buying twice its Seashire and Woosher. You end up plugged in. On la morso. Therefore, the true premise of averaging, downest note, mathematics, itis judgment. Judging whether the stock is still worth holding. Most people get stuck at this. That because they haven, ever actually mateth this judgment. Next is the second common doubt. What if the stock's fundamental actual is still pretty good? This is an important question. Stocks with good fundamentals are indeed worth averaging down. Beauty o need to verify sen things. Has the company's revenue grown continuously over the past 10 years? Is this industry still in the mainstream for the next Woo years? Has the company's free cash flow turned negative? These are 3 indicators are published information that you can check directly on the market observation post system, which that a Taiwan Stock Exchange requires listed componesto disclose quarterly. I fall sen indicators pass, the stock qualifies for averaging down. If an indicator shows a problem, averaging down is just digging deeper. Hold for yourself, keep on a thing in mind, thinking the fundamentals were maybe good when you boughten, and the fundamentals being good now, are at what different things. Industry exchange, company exchange, and competitive landscape exchange. A good company, Senor Sago, might not be good, company Tode. The last thing you might worry about is, I can jet over the pine of realizing thelos. What shul dido? This is the most authentic motion. We won't pretend this doesn't exist. There is a phenomenon in psychology called edless aversion. Research shows that people's perceived intensity of losses, RT o Wu times stat of equal gains. This means the pain of losing, sure, linin yuan is equal to, the happiness of earning sure, linin yuan, serializing galose texitis indeed. Very painful, the problem is, doyao think cold, dingen without move, vingus painless. Imaginetha, see years you were locked in, every day you opened, do your account, every time you saw that negative sign, every time you saw others' stocks rise, with the accumulated pain bliss, then realizing thalassance. More importantly, where does that money go ftar Uriel Lysithalos? If I Urielus Thalasandexit, liquidating your holdings, the cash comes out, this is Thartov stop, Jan loss. Beautifactorializing Thalasandexiting. You invest that money into a stock that will true lie rise. That is the real path of stopping the bleeding endstage. Genja turnaround, this is exactly the core method I'm about to explain. What is switching to resolve lock dan in? Simply put, when you find that the original stock is no longer worth holding, you don't just exit to cash, you switch that locked gen in money directly into another stock with a good upside potential using the new stock's growth to offset the original loss. Theki taught this approach isn't the selling, it is what you boobe. We will break this down into CS steps. Step ye. Confirm whether the original stock real need stobes. Uneta red turn to the sen, indicators mentioned earlier, revenue growth, industry trends, and free cash flow. I fall sen indicator still pass. Yo shouldn't switch, if are or more have issues, prepare to switch. For example, a shumeo, Werlakdina, PCB stock, down by 5%, let's a datum here, PCB, full name printed circuit board, is the core component of electronic products, just thinko phytosanic fixer. Back to the example, you check the market observation post system and find the company's revenue has been declining continuously for the past 10 years. The industry is facing competition from Southeast Asia and free cash flow turn negative via year. All sen indicators are problematic. This is the signal to switch. Conversely, if your luktensam C down by censure, and you check their salt san findrevenois, still growing, the trend is confirmed, and free cash flow hetercordai, these sen indicators all pass. In this case, don't switch. Averaging down is actual irrational. Step R. Pick the target for switching. Most people get stuck here because they're researching. Stock saganisto tiring. I'll give you sen selection principles. Choose a stock you are already holding. If you already have a stock in your portfolio, thathasrisen well, doubling down in toitus equivalent to moving locked, jan in money into a profitable position. Choose a largitofs, sortop, wushami, market cap weighted stocks, such stock shaves, malar fluctuations, and relative listable fundamentals, although they want sergentha short term, the probability of long jan term upsidishai, choose a target you have in track, in for a long time bethaven tentered. Everyone has these stocks on their watch list. If there is a stock you have searched and think is good both of being holding off on. This is a good entry opportunity. Also, therier sen, things not tado. Don't choose hot tips you weren't familiar with. Don't choose hot stocks recommended influencers. Don't choose popular stocks that the reason out recently. The seco isusually latode ding locks upon locks. Step sends, switch in batches. Don't dortalatants. Switching isn't juicestone move. It is a process. Itis recommendedo complete titan, sen s stages, with intervals of weeks between each. For the first time, switch by wusher. Confirm the new stock trend meets expectations before proceeding to the next step. Switch by censures for the second time. By then, you already have ethereal, jan world feel of the first batch and can adjust their rhythm. Switch by arsher for the third time, the final batches, and to confirm the new position, nis fully established. Why doetin batches? Because you are experiencing an emotional stage, switching gin batches avoid sextreme medecisions under panicanjacy, you a chance a torp and timid zan way. If you think the new stock is in trite, you still have by wusher of the position available for zan evaluation, step set new disciplines. After switching, the most important thing is not repeat that story. You notice at our disciplines, if the new stock drops by shu, stopandre jan evaluate, don't add more. If the new stock rises by censure, sell by censure of that position to recover that cost basis, and treat their menderesa winner to hold, for the benefits office. Iluse hypothetical scenario to show you. Suppose you are locked in a stock original cost wulinin, lininin, now left with sem wulin, lininin. You choose setos which tours all the lock janin. If you kept averaging down a ding another wulinin, lininin, and this stock continues to drop by censure, you would have about liulinin, lininin left. Originalia, ya wulin, lininin loss, noa, silinin, lininin loss. If you choose set a switch towards all the lock, janin, moving sanwulin, lininin, in toa stock with good fundamentals, and the new stock rises, by susher, within a year, you would return to 490 000. A difference of sure, lininin, from the original wulinin, lininin, a few more reminiscent uberkiven, to choices, the difference after aeris, wulinin, lininin t, or sure, lininin. This is why the break, jan even speed off switching towards solviolok, jan inis, on average, sen times faster than averaging down. This method isn't omnipotent. Let's clarify what situation it fits, what isn't, and what is the worst that can happen. First, let's talk about suitable target, people locked in stocks, with deteriorating fundamentals. If R or more of the earlier indicators show problems, this is that situation. Second, those who already have a watch list, if you have been watch, chingo their stocks and know which is worth buying, the decision cost of switching will be much lower. Third, people whose lock jan in has affected their daily life and emotions. If you open your account every day and feel bad, switching isn't just a financial decision, it is psychological therapy. However, Therier Wu, case where recommend not moving first, if you're locked in a good company with irresistible fundamentals, DSMC, Mediatek, Delta Electronics, averaging down aftera, bifengesensure drop is immeration than switching. If Ionitas money in the short term, to betaken out, with an year, that the uncertainty of switching gis to high for you it is better torialiselasan take back the cash. If you have end at an research, don't even know fundamentals of the stock in your hand, and don't know which dose, stützto, you should stop first, spend our weeks researching your holdings, then make a decision. If you have been investing for less than a year, the thing investors fear most is switching toward stock. It is recommended to find different with experience or discuss with a professional financial advisor. If your minds as to still emotional, just locked in, still in thesta Joe fang yourself, Jan blame, don't make your decisions, wait for your emotions to settle for a week before deciding. Finally, let's talk about the worst case. If you follow this method of switch, what is the worst thing can happen? The worst case is that the original stock you were locked din bounces back by just censures after you sell, while the new stock you bought drops by arsher. This scenario can indeed happen, but there are few primacy. You nedo remember, you decided to switch because the original stock's fundamentals were problematic. A Befangeline rebound in a stock with bad fundamentals, usually a technic rebound, it will fall back in a few months. So even if you had waited for the rebound, you might not have been about to hold in toit. The new stock you bought was validated by sen indicators. A short zan term by arshu drop is inevitable, but the long zan term probability of fupsidermans on your side. If I truly encounter this worst zan case scenario, don't regret. Instead, check the new stock you bought, have the sen indicators changed. If the indicators still pass, that is market volatility key folding. If an indicator shows a problem, it means you didn't dofel home, work when picking the stock, learn the lesson, this time and research deeper. Next time, switching to Solvialock, Jan doesn't guarantee a wine every time. I tensure see want, continue a best kind about decision, that is that true meaning of stop, Jan loss. Let's summarize the points. When locked in by censure and seeing airbound, most people coast to average down. But by seizure end up with an deeper loss 6 months later. Their reason is at averaging down is wrong. It is that no judgment was made ever for averaging down. What do you should drally check? Send indicators first. If the original stock's fundamental shave deteriorated, switch in batches to a new target. The break, Jan even speed can bay, send times faster. If this video has helped you, remember to subscribe to Moni Power Lab. Where continue to dismantle financial traps and turnaround strategy is that working? Jan, class people should know. Final reminder, the content of fish analysis general, financial knowledge sharing and does know constitute investment advice. Every own situation is different. Consult a professional financial advisor before mayor decisions. See you in the next video.